Want to buy an apartment with your earnings? It doesn't let you worry. The exit has already been found. By watching this video, you learn about Robert Kiyosaki's scheme, which will help you not only buy the treasured housing but also profitable to invest, providing yourself with passive income channel to become a billionaire. Subscribe soon and open secrets of the world of finance and join us in what is the essence of the approach. Kiosks about real estate deposits. Based on my experience, Robert recommend buying property, borrowed money from the bank and then hand it over to rent at a price that will cover monthly loan repayments and additional real estate expenses. Creating such a cash flow, you will come to the conclusion that your property will pay for itself by investing in real estate. Gives for incomes at once: rental income, depreciation, increase in value, and tax advantages. Will describe Kiyosaki in his book Real Estate Investment. This approach quite risky because conditions of unstable economic situation in the world of complexity, from the calculation of the future of the dollar is constantly growing and the national currency is constantly on the brink of default in the future. To develop such a situation that the money which you borrowed from the bank at interest, it will be difficult for you to pay. But if you correctly assess all the risks and approach to the Kiyosaki scheme with the mind, then with the big, likely to be successful and get richer. So let's go over the basic principles, Robert Kiyosaki's method, and then try to use on certain real estate investment examples. Robert Kiyosaki started making from the beginning capital of $300 today. He was able to earn on real estate over $100 million. You ask, what is the secret of such success? He became by the person who could invent and implement a formula that allows you to make money on real estate by investing the minimum amount own funds to buy an apartment in new building. Today is possible with several ways: on credit, installment mortgage, on bank loans, and 100 payment by Kiyosaki method. The surest way is purchase of residential or commercial real estate on credit. Costs: so you have opportunity to buy an apartment builder for free and have income from this kind of investment infinitely. But realistically, analyzing this judgment is not a line of Osaka. We can come to the conclusion that in the open spaces, post-Soviet space, this scheme does not always work. For this to get mortgage loans, our countries, you need to have a certain amount of initial contribution. In this case, the yield from your loan investments. Limited mortgage lending for the object properties for rent are converted essentially into margin trading. That is, leverage trading. Over the profitability of such investments will be less than from own contributions. Cash for a total of. Today there is a real way out of situations. Some financial institutions provide mortgage lending in the absence of absolutely no money. Period of signing the contract. You can implement the Kiyosaki method. It is worth noting that the annual interest on such a transaction have enough high equivalent of a before I will reveal the Kiyosaki scheme on a certain example. I would like to remind you that if you want to see more variety of videos on our channel, and be sure to like this video. So an example of the figure scheme itself is conditional. Object price $140,000, expenses for registration of $10,000, down payment $40,000, costs equals $50,000, credit $100,000, loan term 100 months, and rate loan is 1% per month. Loan payments follow in first. This divide the body of the loan by the term of the loan, and we get $1,000 a month. Further interest and credit multiplied by the rate, we get a loan of $1,000 a month. And there is also a loan payment, the body of the loan plus interest, we get $2,000 per month. Also in this scheme there are taxes, utilities, and other expenses that equal to $500. Conditional money income from rent $3,000, and net income is income minus loan payment minus utility costs and debt. $500 got the following by spending $50,000. We purchased an object worth $140,000 plus a source of permanent income in $500 per month. In this case is 1. Interest per month seems low because anything to $1,000 per month in loan payments, we would get all 5 more, but no, not at 5. And after all, the income is $2,500 would have to be divided by the full the cost of $150,000, and it would be about 17% a month. But this amount, we just didn't have it, and if we did, then we better buy 3 of these on credit object and would receive from them in aggregate to percent per month vs 1.7% per month. To get this ratio is not simple but possible. The main thing is to discard the bulk of the empty junk offers filled with market, and it is possible to fish out of them one of a kind. Pearl is unlikely to be in the sector. Residential real estate in the first place. Consider office, retail, and warehouse space. There are many factors that influence your choices. They are not the main theme. This video does not stop there. Let's be friends. You can write to comments. Would you be interested to know which real estate is the best investment? Money if there are comments. I will dedicate enough to this topic. Attention, it is obvious that the final figure, income, could be improved by reducing the price of the objective expenditure for processing the loan rate, down payment of taxes and utility costs, as well as increasing the loan term and cost. Leases over each of these options can work to achieve its change in. The right side is also a separate and a considerable topic. When loan payments will end, we will be able to receive already to $5,000 a month, but our costs remained at the level of $50,000 because everything else paid. Our rent income will be 5 per month, actually 5 times more than crediting time. But the most interesting will be further. Let's say 50 of our 100 months already repaid 50,000 of required 100,000 loans. Let's say the market value of our property changed. We come your bank with offer. We have an object worth 140,000, which brings monthly $2,500 net income, because of which we must you 50,000. You see what we are: a conscientious borrower, meet our loan obligations, and income level allows it. We will refinance our object for its full value. Will give us a loan of 140,000, from which we will repay our debt 50,000. We will send the remaining money to reconstruction of the object that will allow increase rent payments up to 4,000 per month net, and also on down payment to buy new one harmful facility credit, on which we will take from you. Again, considering our impeccable credit history, reduce the rate of the new loan and its term, increase the right bank stream of such borrowers, and within reasonable limits agree to meet them halfway. True current situation in the credit sector: tense borrowers do not trust the bank, banks do not trust the borrower. Each country cunning and looking for one-sided advantages. In such an atmosphere is more difficult to get a good reputation, but harder does not mean impossible. Therefore, prepare to implement the Kiyosaki scheme you need early. What does it mean to have positive credit history? Learn to evaluate and choose an object real estate, to learn how to draw up and calculate business plans according to the real business. Study the principles of banking and direction of different types of lending. Know the rental situation in that sector. Real estate: buy an apartment and still make good money. As you already understood, it is very possible. The main thing is not to be afraid to go small risks for the sake of great profit. And after all, real estate, one of the assets defining our wealth in the long run, and should be treated accordingly. And be sure to share this video with friends, or just run it at your place in social networks if you think that this topic interesting. And don't forget to subscribe to our channel and press the bell so as not to miss new videos. This channel: become a billionaire. You can become richer.